Mark, good morning. Great to have you here.
Good morning.
All right, so again, we saw the markets end up higher despite the concerns over the conflict over there in Israel. And the Fed Watch tool saying we have an increased chance of the Fed taking no decision or actually deciding not to hike at its next meeting coming up in November. Do you agree with that opinion? And do you believe, is that the reason why we saw markets end higher yesterday?
Well, there's a lot of truth to that. I mean, you have some really terrible headlines across the world. We still have the Ukraine-Russia war and now this tragedy that's happening over in Gaza, and yet the stock markets rally. And that just comes down to the fact that interest rates dropped due to the flight to safety. But don't forget, there was a lot of pillow talk coming from the Fed heads yesterday, and they were underscoring the fact that they're aware that they may be near or at the end of the rate hike cycle. And I've said before, the biggest driver for this market is Jerome Powell. He is the #1 factor that could tilt stocks to the positive if the Fed continues this pillow talk and sweet rhetoric and keep whispering what the market investors want to hear. Then I think we see a stock market rally. But short of that, I think there's just cautionary signals.
All right, to your point, we have 4 Fed speakers speaking later today. Also want to talk to you about earnings season begins this week. Taking a look at the estimates right now. So the estimates have some earnings growth for Q3, modest growth, but still earnings growth for Q3. Does the rise in oil prices and the potential for an even sharper rise, does that change that narrative in your mind about Q3 earnings?
Well, it'll help earnings in the energy sector, but across the board, the inputs that oil have negatively impact earnings. So do wages. And I know in some sectors we have some wage compression and it's helping the overall inflation number. But in other industries, we're seeing significant wage hikes. Mack Truck, just those workers were this close to signing on a deal, they walked away. You have pilots. You also have obviously the auto workers, but you have healthcare workers striking. And these wage gains across the board are going to impact both earnings or inflation. Can't go any other way. The higher wage component will either lower prices, earnings, or they will raise inflation. And earnings historically are inversely related to stock prices. That's another cautionary sign that I think the market might be slightly undertaking right now.
All right, Mark Avallone, always great to see you. Thank you very much.